Hey YouTube, this is Coldwater from Phantom Trading, and welcome to today's video on how to pass a prop firm challenge. In today's video, I'm going to be showing you an FTMO challenge that I just completed today. I started it, I think in late November or mid-November. Oh yeah, actually November 16th, as you guys can see here. And I wanted to show you guys kind of how I did it, and I wanted to give you guys some tips and give you an idea of what it's like to get funding through a prop firm. Some of the challenges you're probably going to run into, and some things that you can do in order to up your chances of actually passing a challenge and verification stage through a prop firm, whether it's through FTMO or E8 or My Forex funds. There are a ton of prop firm funds that are out there. I think it's a great opportunity overall, of course. But of course it is slanted toward the prop firm, and they make money one of two ways: either through your challenge fee, they're kind of banking on you losing. There is data out there from My Forex funds that they publish showing what the actual success rate is, but that's one way of them making money, is through challenge fees and people failing them, including verifications. And then of course they also make money by copying trades from their winning traders who have a really good track record of consistency. So anyways, with that being said, let's dive into it. We're going to talk about a few of the different things that you can do to improve your chances of passing a funding challenge. Before we dive into it, let's actually look at this prop firm challenge that, again, I just completed today. It's December the 12th. I'm probably going to upload this video on the 13th, or maybe today, we'll see. So by the time you're watching this, it might be a day old, but essentially what I did with this particular account, and the reason I want to show you guys this is to give you an example of how you would pass a prop firm challenge. In this particular case, I only traded the 15-minute. I only traded pound dollar GU, right? Euro dollar EU, and NAS 100. So I only focused on those three pairs. I didn't even trade AU, which I look at sometimes. I'll trade Asia for that, but I was very conservative with this. I have prop firm funding with FTMO already, but this is now my fourth challenge account with them. And, I still have to do the verification stage, which, we'll talk about as well. But the reason that I don't like doing challenges back to back, and the reason I've waited so long, is because the honest truth is, for me and for most people, it affects my trading psychology. I find that being in a challenge makes me trade in a lot more of a different way, sometimes in a more aggressive way than I should be, right? You can't just sit on your hands. You have, in most cases, a 30-day window that you kind of have to hit that profit target within. Now, of course, they have extensions that you can request if you're up 5%. And again, we'll talk about that in more detail in a bit. But anyways, that's kind of the parameters that I had for this. It took me, just under, a month, I think probably 26 days to complete this. And you can kind of see here some of the stats. So I actually hit almost 12K on this because I have this linked to my personal accounts and my funded accounts. I didn't want to close my trades earlier and, potentially, especially for the last trade that I took, and potentially lose out on, a trade that was a really great setup. It was running, right? So I let it run a little bit and I was like, okay with that. I didn't close it right away when I hit 10K. Now, of course, if you're not copying your trades over, you probably should do that. Don't try to bank on it. I've been in situations where I've seen, the equity in the account actually hit over 10K and then it, slid back down. Maybe I got a little bit too greedy on a trade in a challenge. And then, I was sitting at like 99,400 or something, right? Or sorry, 9,400. So there's certain situations like that. But anyways, you can see my average R here is about 2.6. That's accounting for, your average trade. My average profit is about $500, average loss 169. So I was taking a lot of break evens, and of course that's sort of reflected in this number too, right? Where I'm taking partials and break evens. Took a ton of break evens this month. I mean, they're not very volatile price action between late November and now, especially trading the 15-minute. I'm not expecting to take much out of it. And you can see my expectancy and profit factor are actually quite high. My win rate is about 70%. Again, because I'm just looking to take super high probability setups, right? And here's a little idea of some of the trades that I took. This is what actually took me over into passing the challenge, right? You can see there's a bunch that I took that I ended up just closing out. They weren't very good positions. And again, this is partly because, I'm in a challenge, and honestly, it messes with my psychology. It's not something that I like trading. Personally, I don't think anybody likes really doing challenges. They, it can be pretty stressful, right? Especially because you have your challenge fee on the line, right? It's not cheap at the end of the day. And that's part of the reason I also like doing 100K accounts, right? Of course I could have done a 200K account, but the idea of paying over $1,000 for a challenge fee, even for me is just, it's a lot of money, right? To have on the line. So the other thing I want to mention, which again, we are going to talk about in more depth here in a second, is what I'm risking per trade on this challenge account. So for me, what I've risked, again, because I'm trading the 15-minute, kind of have to do it. And even if you're trading the 1 minute or the 5 minute, I would suggest risking 1% on these accounts. The reason why is because you want to try to hit that 10%. And of course, if you're risking 0.5%, that means you need to now make 20R. If you're risking 0.25, you have to make 40R, right? So you get the idea. With risking 1%, I only have to make 10R. Net 10R, right? So that's very achievable, especially trading the 15-minute. And so that's why I've approached it that way, right? And it's a lot easier, right? Now, you may or may not be comfortable. It may not be within your risk appetite to do that. And I think in some cases, if you've proven to be able to make, some 20R, maybe trading the 1 minute per month consistently, and you're able to do that and you feel like you're going to get tilted risking 1%, then okay, so be it, right? Risk 0.5%. I've done it before. In the past, when I was trading the 1 minute, I did pass a challenge by making 20R, risking 0.5%. That's kind of how I used to approach it. Now I've changed it to this, right? Because I'm a little more comfortable and I don't take as many losses as I used to when I was trading the 1 minute, right? So anyways, let's dive into, I'm just going to pull up Photoshop here and we're going to do some diagrams. And I want to, talk about some of the ways that we can up the probability of you guys, winning your prop firm accounts. Okay, guys, so let's discuss some of the things that you're going to need to start with actually getting involved with a prop firm and trying to get your funding. So let me just write this out here. So obviously we are talking about prop firm funding, in which you are essentially paying a challenge fee to one of the above funding companies, prop firm funds, right? And that fee obviously ranges depending on the amount of capital that you're looking to secure. And in most cases, with the exception of a couple of prop firms that I know are out there and actually give you access to real funds, these prop firms that I have listed out here, FTMO, MFF, and E8. And the reason I'm actually showing you guys these ones and talking about these ones is because they're proven to actually give out payouts. In the past, there have been certain prop firms that I won't mention that have scammed people either through exit scams or because they were not regulated properly in whatever country that they were operating in. And because of that, people lost out on their payouts. In a lot of cases, people weren't getting paid out at all. They would have to dispute it. But in this case, these three prop firms are quite reputable. They've been around for a while and they pay people out. Right? And I actually use a couple of them. So that being said, right, for these particular prop firms, they actually give you access to a demo account, right? And again, they are just copying the trades that you do within your account, and they're copying it over to their live trading accounts so that they can make money off of your edge in the market, right? And then they're diversifying it because all three of these prop firms essentially have something like tens of thousands of traders trading with them, right? I know FTMO has the most, then probably followed by MFF, right? My Forex funds, and then E8, right? E8's a little bit newer, but again, they are what I would consider a trustworthy prop firm, and I actually use them as well. So I can recommend them, right? So what are we going to need for prop firm funding? Number one, you're going to need money for a challenge fee, right? So we'll put that as one of the first things, right? Challenge fee. Oops, can't spell. Our challenge fee, right? So our challenge fee is an important thing. And so I typically like to go for the 100K challenge fees. And that for me usually runs around 550 to 600 US dollars, right? So let's just say 600 on average is what we need for that for a 100K account. That's our challenge fee. That's one thing that you're going to need, right? So it's important that you have, enough money for that. If, you have to save up for this, I would consider, practicing for a while and really saving up, because you don't want this to be the last $600 in your bank account. It's just going to stress you out way too much, right? I can just tell you, based on people in fandom who try to do it a little bit too early, and maybe they need that money to pay for something like rent or their bills. Like, it's not a good idea, right? You want to save up and have like a good buffer there. And once you have money lying around that you're willing to lose, that's when you can go and spend that challenge fee money, right? Your alternative is, if this is too much money for you, is just go for a smaller account, a 10K or 50K account. They're a lot cheaper. You can look at the pricing on any one of these prop firms and you'll know exactly what I'm talking about. I'm just gonna make a new layer here because for whatever reason, getting some flickering whenever I try to draw. Okay, there we go. That's a little bit better. So yeah, again, I think, they range from 100 to 200. I mean, for me, it ends up costing around like 750 Canadian dollars roughly. So again, it's not cheap for a 100K account, right? But I think 100K is a good place to start if you can afford it. If not, go for something cheaper. I do not recommend doing 200K accounts unless you're super, super confident. And even then, even if you think you're confident, I mean, look at me, I'm not doing it and I've passed a bunch of challenges. I think it's way too much stress and it's way too much money. It ends up costing anywhere from, 1,000 to, 1,200 US dollars, right? For a 200K account. So I'm not a fan of those. It just feels like there's too much risk on the table on that. And for me, it tilts me enough that, I don't want to get involved with it, right? So that's one thing you're going to need. Second thing you're going to need is a trading plan, right? So that's obviously super important. Without a trading plan, when you go into a challenge, I mean, you're essentially gambling, right? So super important that you have a good trading plan that you've tested, you have data behind, and that you believe in, right? You have confidence behind your trading plan and your ability to execute it, nearly flawlessly, right? You don't want to be making mistakes. I mean, you will probably make mistakes, if you're not used to taking challenges. Again, it may mess with your trading psychology. It's very possible. But that being said, it's important that you have a trading plan, because without a plan in place, again, you're just going to be gambling, right? Entering stuff that doesn't fit within a particular strategy. So there's one of a few ways that you can do this. Maybe you already have one because you are a trader and you like trading retail strategies. There's nothing wrong with that. People pass all the time with that type of strategy, right? Of course, you could also join phantom trading, or maybe you're already a phantom trading student and maybe you want to learn a supply and demand strategy like ours that we use, right? Our trading strategy revolves heavily around liquidity concepts, as well as structure, as we've taught in previous videos on this YouTube channel. And honestly, I think you could develop a trading plan without even joining Phantom if you really put your mind to it, right? There's a lot of free resources that we have on the YouTube channel, but of course, if you want to shortcut that, join Phantom Trading, and you'll be surrounded among a community of traders that are all trying to do the same thing. Plus, you get access to us, trading coaches, and the team members that offer support, as well as trade and share their trades on pretty much a daily basis, both through end of day markups and in our live analysis channels and chats, and our live streams on the Discord chat, right? So of course I have to plug Phantom a little bit. I think it's a great community, otherwise I wouldn't be here on this YouTube channel telling you guys about it, right? So that's the second thing that you're gonna need, is a trading plan and a solid strategy, right? Number 3, what you're gonna need is trading experience, right? And this is a big one that I see people skip over a lot. They think, okay, because they've joined a course like Phantom within 2 months, or maybe even like a couple weeks, they're like, okay, I'm gonna go buy a challenge right away and we're gonna try to like attack it, right? So to me, this one's super important, having trading experience. And how do you get that, right? I honestly think that, unless you have at least 6 months under your belt of like demo or even a small live account, so we'll put demo/live on here, of you actually trading in a live market environment, without that, you're pretty much destined to fail. And there's a reason that the failure rate for prop firm funding is so high. A lot of people speculated somewhere in like the 95% range that most people fail. And again, it's because of their lack of trading experience and trading psychology skills, right? So it's a bit of a mix of both, right? Now in this case, obviously, when we're talking about a trading plan, this is like our mechanical like strategy or rather our technical analysis skills. So I'll put that here, right? Put technical skills, right? Because that's obviously important and you need that. But of course, trading experience is kind of a mix of our technical analysis skills. So I'll say that's TA, and trading psychology, right? We'll say TS in this case, right? And again, trading a demo or live account, and it could be a small live account, maybe with $1,000, or it could be 500, whatever is enough for you to kind of like, you know, get your emotions involved with it. That's going to be enough to help you build that trading experience, right? So really trading experience is essentially you executing a trading plan over, you know, a certain period of time and proving consistency to yourself and, you know, building up your confidence essentially, right? And again, without this trading experience, if you go in and, you know, start a 100K account or try to get a challenge account and try to complete it without that or a trading plan, I mean, again, you expect to pretty much fail, right? It's almost a certainty that you will fail. It is stacked against you, right? You have a time limit against you and you have to try to make 10%, right? Now, of course, I'm not saying that it's impossible for you to just put on, you know, a huge trade and, you know, get lucky, right? But to me, that's not consistent trading. And I mean, if you're going to gamble like that, you might as well go to a casino, right? It's not much different, right? You can put everything on black or red at a roulette table. What's the difference, right? You're just gambling at the end of the day. So it's super important. And by the way, you know, these prop firms obviously frown upon that. I think even FTMO recently had sent out an email saying, you know, they don't approve of people doing stuff like that and gambling in the market, putting on huge positions and trying to get lucky, right? Because at the end of the day, you know, they're copying their profitable traders' trades. And if they're going to be exposed to risk because people are over leveraging, getting into like huge positions that don't make sense, I mean, eventually it's going to hurt the prop firm, right? So there's a reason that, you know, they don't like that, right? So those are the three main things that you're going to need in order to get prop firm funding. And then, you know, aside from that, I mean, there's really a fourth thing, and it's really just confidence in yourself, right? Which again, you're going to build through these two that we just talked about, these 2 points, right? So a big thing is self-confidence, right? Without that, if you come into it not believing in yourself, again, that's going to hurt your chances, right? And again, that kind of relates back to the whole trade psychology thing, right? But you really need to prove to yourself that, you know, you're comfortable with risking, you know, in this case, if it's a 100K account, it's $1,000 per trade. And if you go into a small drawdown at the start, it's okay, it's recoverable, right? I've had challenge accounts where I've gone, you know, deep in the drawdown and then I've brought it back either to break even and get a retrial, or I was able to, you know, bring it to a full 10%, right? So it's obviously possible. It does take a considerable amount of skill and confidence, both on the technical analysis and trade psychology. Well, this should actually be P, not S, sorry. Trade psychology, right? But anyways, those are really the 4 core things that you're going to need, right? And of course, we can break down each of these points individually. What we could do, actually, what I'm going to do really quick here is talk a little bit about trading plan and the technical analysis side. And again, this is more in terms of, this is more related to Phantom and the way that we trade. But, you know, really it's a few things, right? You need to have a good idea of market structure, right? If you're going to trade the way that we trade. And really this is applicable to retail traders too. If you trade retail, you're probably using some sort of market structure anyways, right? So market structure is important, right? So you know the direction and trend of the market. And then what else? We also have our POI selection, right? So POI selection, right? Being able to pick good quality 4-hour and 15-minute POIs if you're trading that. And then we're also going to need our liquidity concepts, right? Because that's a big one that we really use in Phantom a lot. Liquidity, hopefully I'm spelling this stuff all right. Kind of hard to talk and write at the same time. Concepts, right? And then we're also going to need our market direction, which we're going to kind of derive from all of these, right? Because essentially we're trying to catch a move in the market. So market direction. And then last but not least, right? And again, this is all just the the technical and strategy side of things that I'm kind of listing out that again relate to phantom trading and the way that we trade our supply and demand strategy, then you're also going to need to be able to know how to execute within the market, right? So we'll call it execution. Oops, execution. Okay, so you guys gotta kind of get the idea of what we're talking about here, and then we can kind of talk about trading experience and our trade psychology and stuff, right? Now I don't know if I'm gonna have released the video on it yet, but there is a trading psychology video that we've just released where I'm just doing some back testing, and I'm also going to be releasing one on trading tilt, which is going to talk a lot about these concepts too. So I urge you guys to watch that video too if you're interested in some trade psychology stuff. But anyways, let's move on and let's talk about the actual meat and potatoes of what it's going to take for you to pass an FTMO challenge. We're just going to go with an FTMO as an example because that's the one that I passed recently, and I want to show you guys, right? Okay guys, so now for this one, we're going to talk a little bit about our FTMO challenge and verification here. And again, this is applicable to any prop firm. They all have pretty similar rules. Some are more lenient than others. I urge you to read the rules before you actually engage or start a challenge. It's really important you understand the rules, of course, right? We'll talk about that in a second. But in the case of FTMO, of course, our profit target is 10%, right? At 5%, we can get an extension, right? If we do that within the first 30 days, they'll give us an additional 15 days for a total, or 14 days for a total of 44 days, I believe. And of course, we have 10 trading days that we need to do where we actually have to take positions within that 30-day period. You have to enter something. It doesn't matter what it is, but you have to trade 10 of those actual 30 days. And our max drawdown for the day is of course 5%. I think most of you guys know that. And our max total drawdown is 10%, right? So essentially, we're trying to make 10R, right? 5R to start so we can potentially secure the extension, and then 10R so we can actually achieve our actual challenge and get to verification, the verification stage, right? So it's obviously stage 1 and then stage 2, and then after that you actually you would expect to get funded, and we'll talk about that a little bit either in another video or potentially even this one. But those are kind of the rules that you kind of have to go for our trading, essentially our trading objectives. That being said, let's go over a little scenario here with an FTMO challenge just to start, right? So the first thing that I want to talk about here is kind of our soft goal that we want to try to hit here. And that soft goal again should be to hit this 5% mark. Sorry about the flickering, guys. I'm not sure why it's doing that. It's because of the images that I have here on Photoshop. But again, the reason we want to try to hit this is because we'll get that extension, right, for an additional 15 or 14 days, right? I think it's 14 days from what I remember, right? For a total of 44 days, right? So if we can hit that and we request it, we can get that, right? Because again, we're proving consistency in that we're not just gambling on the account, and I think FTMO appreciates that. Or most prop firms. I believe E8 and MFF also offer this as well. But anyways, let's go through sort of a theoretical equity curve that we're going to go through. And we'll just start with this, right? So typically you're going to hop into it. And of course, whenever you place your first trade is when you actually start the 30-day countdown, right? Of the total number of days you have to pass the challenge before it actually ends, right? In the case of verifications, of course, you don't get extensions. At least I don't think you do. Maybe that's something they'll add in the future, or maybe it does exist. But again, something that you can research. I honestly don't know. But anyways, so pretend we're taking our first trade. What I typically see a lot of people do is, they're super hesitant. They're afraid to take that first trade, right? I mean, it makes sense because once you start, the timer starts counting down, right? So of course it's a little bit of a stressful situation, but the way that I always like to start my trading challenges is I just go into it and treat it the exact same way I treat, or how I would have treated demo or a small live account, right? Because you would have been practicing, like I was talking about, for 6 to 12 months or more, practicing in demo or a small live account to again build that confidence up, right? So what I would do is again treat it like a demo account, because really it is at the end of the day, except that you may or may not pass it. You really don't know, right? but you don't want to put so much pressure on yourself that you start making mistakes, early on or any time within the challenge or verification stages, right? Of course, it's stressful, but it's something that you'll learn to deal with as you go through and start passing them, right? It is, of course, possible to pass them. It just takes a lot of skill, right? And it's not very forgiving, right? That's just the honest truth about prop firm funding and trading in general, right? Not an easy skill to build, especially, being consistent with it, right? But anyways, what I want you guys to do is look for a high probability setup within your trading plan and take it. Don't hesitate, right? And if you take the loss, be okay with taking the loss, right? So let's pretend that our first trade here turns out to be a loss, okay? Not a big deal. We're down 1% plus commission. It's probably like $1,100 that we're down on a 100K account. Okay, not a big deal. So take this first loss, and then say maybe because you're new to this, you decide, okay, I'm going to revenge trade now because I want to try to make that loss back and go back break even, okay, maybe you make a little error there. You write about it in your journal, and obviously it's important to document your trades and stuff, right? It's very important you do self-reflection, especially when you're in an FTMO challenge, right? And that's fine. You take a little misstep, not a big deal. Ideally, you don't do that, and I'm kind of mentioning it here so that you can avoid making this mistake, right? Now you're down about 2.2%, right? Again, accounting for commissions, plus the 1,000 or so that you're risking per trade, right? And we don't want to keep on making the same mistake, right? So maybe the next trade setup that happens, again, we're going to take it. This time it's high probability, and you have to accept the risk, right? You could potentially lose this next trade, and that's fine, right? We don't know what's going to happen. Essentially, you're paying to find out what is going to happen in the market next, and whether that trade profits or it hits your stop loss. We don't really have much control over that. We're just playing out the probabilities, right? Again, I'm borrowing from Mark Douglas on this in his trade psychology books. Rest in peace. Great resource at the end of the day. I think his books are amazing. Probably the best guy that you can learn from in terms of trading psychology, really, right? So big shout out to Mark Douglas. But listen, the next trade that you take, maybe it's a loss again, right? And maybe it's a valid loss, right? So essentially, the way that I like to view it is, if I take a loss that is, it results in a loss based on a high probability setup, I'm okay with that, right? Sure, it sucks, it doesn't feel great, and maybe that's something that's going to improve in the long term, right? You start to really build a thick skin to losing, but as long as you're confident that it could have worked out with a high probability of over 50 to 60%, right? Or depending on what your system calls for, right? You'd be okay with that, right? And you'd be at peace with it, right? But anyways, what I see people do a lot from here is when they start hitting a string of losses early on in their FTMO account, I'll draw little dots to indicate trades. Now we're down probably 3.3%, and we're already starting to approach 15 days on this, right? Now we're thinking, okay, I've taken a bunch of losses, and now you probably have a lot of fear built up in you about taking the next trade, right? It could even be as much as 4 losses. Maybe you say we go like 4.4% into drawdown, right? And then maybe we take a break even or something. And now we're past 15 days. Okay, again, this hypothetical situation that I'm going through, but I've been in situations like this where I start in a drawdown and then I'm able to recover it either to get a retrial at 0%, right, at break even, which I forgot to mention earlier, or I was able to bring it all the way to 10% and actually complete the funding challenge despite being in this situation, right? So that being said, right, maybe on the next trade, it's like you're going to hesitate and you're fearful to enter it, even though it's, again, another high probability setup, because the last few trades that you took were losses, right? And you can't think that way when you're doing a challenge. You have limited time, so you really have to be confident. And even if you make some mistakes at the start, doesn't mean that you can't recover it, right? So there's 2 situations that are going to happen. Either you're going to not take the trade, or you're going to miss it because you hesitated, and maybe you're going to chase the next one, and that's going to result in another loss. And now we're below 5%, right? But ideally, what I'd like you guys to do is, if you're in this situation, is look for your high probability setup and take it, right, without hesitating. And say maybe that next trade ends up being like a 6R trade or something, right? And we go from negative 4.4 maybe to plus 2, right? So what is that, 6R roughly, or 7R? I don't know. But now we're up and we're above the break-even point, right? Now, we are what, roughly 18 days into our challenge. That means we have roughly 12 days left, and we're up, about 2%, maybe 2.5% or something, right? Okay, that's fine. You have kind of two options here. Ideally, what I would do is keep on trading it, and that's really what you should do, and continue to try to hit this 5% number or goal, our soft goal, so that we can hit that extension, right? As long as we're above this, again, before the 30 days is up, right? I think it's 29 days or something. You can get those extra 14 days, right? So that's really important. So maybe we do that. Maybe we take a couple break evens and we're getting closer to the 30-day mark, right? And again, I'm going to go through a couple scenarios here, but obviously at the end, I'm going to show you the ideal scenario and how to approach it. But I want to show you the different ways that, you can approach the challenge account depending on like the circumstance that you're in based on your trading and what your actual net P&L is on the account, right? So let's pretend now that, okay, you take a couple break evens, not a big deal. And, we're going to do this example first, right? Maybe you take another loss, right? You're still above 0%. I would say that if you are within, 4 to 5 days, maybe 4 days of the actual 30-day limit here, and you're nowhere close to the 5% mark, the best thing you can do is just stop trading the account and get a retrial, right? And just start from scratch again, right? Nothing wrong with that. I've done this plenty of times where I've gotten retrials, but that's the way that you should be approaching this, because otherwise, potentially you're going to take more losses, which, you can expect is going to happen, right? And maybe you're going to run out of time and you don't want to be in drawdown and just lose your challenge fee, right? This is where a lot of people end up losing, okay? So ideally, you leave it flat and a little bit above, and you get your retrial to give you a new account. Not a big deal. You get another shot at it, and you get more opportunity to practice trading a challenge account, which I think is great, right? That's one of the great things about these prop firms. They give you another chance if you can prove that you're not going to lose money over that 30-day period. Okay, so that's one scenario, and that's how I would play that out. Now, on the other hand, if say, okay, maybe we take a loss here, and then on that same day, we're able to pull another, say another like 4 or 5 hour trade, right? Again, I'm being conservative with it. And now we're sitting at around, 6%, right? Well, in this particular scenario, obviously, it should be obvious what you would do here, right? It would be to request an extension, right? And so I'd probably just wait until, or you can request it at any time, I'm pretty sure. Personally, I've never done it, but we know that the prop firms offer it, right? In this case, you request it and you get your extra, 15 days or so, right? And same thing, right? So I believe with FTMO, as long as you stay above that 0%, they're going to give you a retrial anyways. But with that extension, you have that 15 days or so that you can now try to hit our hard target of 10% to actually pass the challenge, right? And again, you want to just take your time here. You have an extension of an additional 14 days. Take your time with it, right? Maybe you take some losses that are valid. That's fine. Maybe you take some break evens, okay? Maybe you take a small win, right? Maybe you get break even again. And now I'm going to talk about a scenario where I'm actually going to suggest that we break some of the critical risk rules that I usually recommend that we never violate, right? If you guys have watched our risk management series, you know that risk management is really the most important part of trading, right? We want to protect our risk and our capital, right? But there are certain situations where, say, we have anywhere from 5, maybe even 7 to 2 days to maybe even 1 day left on our account. And, maybe we are in a situation where we're very close to the profit target, but we don't really have much time to sort of mess around with it. This is where I would suggest Hail Marying the account. Now, of course, you want to be very mindful of our daily drawdown rule of -5%, right? Because if we violate this, we end up losing the entire challenge account, right? So be aware of that. But it doesn't mean that you can't come here and, maybe risk 2% on a trade on one of the last few days, right? Within the last 3 days or something. Because potentially that can take you over 10%, right? Now, of course, this is a double-edged sword, because if you're going to risk 2% or even 3% on a trade, of course, you can very easily hit the 0% mark. So really, the way that I want you guys to view this is, if you're in this situation and you're going to risk this much, right? Not 5%, you shouldn't do that, but maybe 2% or 3%, right? Or 2.5%, or maybe 1.5%, whatever you feel comfortable with, right? And you feel can actually take you above 10%. Be sure that you don't go below our break-even point of 0%, right? So we're up 6%. That gives us, at 2% per trade, basically 3 shots, right? So, I mean, you're running out of time. You might as well do it, or you're going to get a retrial. So there's really nothing to lose by doing that, right? But this is the one time I would suggest messing with your risk a little bit. Would I suggest doing this if you have, live or funded accounts connected via trade copier to your FTMO challenge? Absolutely not, right? Do not do that, right? Would I suggest doing this in a funded account? Absolutely not. No way in hell would I suggest risking more than 1% in a funded challenge account. It doesn't make sense, right? If you run it through an equity curve simulator, you're asking for a high risk of ruin. You will eventually blow the account doing stuff like that. It's gambling, in my opinion. Same goes for live personal accounts. Don't go crazy with it, right? So in this particular case, again, there's 2 scenarios that can happen. I'm risking 2% per trade. Now I'm amplified, right? For every R that I make, I'm making 2%, or essentially 2%. So really, if I'm at 6% and I need to make 10%, what do I have to make? Right? I have 4% left. That means I only need to make a 2R trade and I'll be able to hit that 10%, right? So that's scenario 1. The other scenario is I go down 2%, right? And then, again, like 2% would be around here, right? I have 3 shots at this, right? So I could take 1 loss, 2 loss, right? And maybe by now it's like you want to make sure that you're not hitting under that 0% mark. You want to be very careful. Maybe you only have 1.5% risk to risk on the last one. But even from here, this is still recoverable up to here, right? But if you get to a situation where it's like you're super close to that break-even point, that's where I would stop and get the retrial, right? But ideally, if you have a few days left, this is sort of your chance to Hail Mary it, and this is the only time I would ever recommend violating risk rules and doing something like this, right? Because it is a challenge account, right? It's a demo account. I don't believe they copy challenge accounts, only funded accounts, right? So this is kind of your chance to do that. And the same is applicable for our FTMO verification, right? With the exception of, obviously if you hit above or at around, or, just above our 0% mark, say we start out here, we take some losses in a similar fashion, right? And then we eventually come up, kind of recover it, right? If we're going to run out of time, right? It's the same thing. Either you can do it, but you want to make sure if you're going to try to Hail Mary the account, right, that you're not, in a situation. Let me do it like this, right? Pretend that this is like 3 losses or something, right? Kind of like this. We'll say it's 2 losses. And we'll call this a big win here, from here to here. Maybe you swung it, so it took a few days for whatever reason, if you're able to do that, right? And say you're in a situation like this where you now have 7 or 8, maybe 12 days left on the account. Again, I wouldn't recommend, maybe say you take a break even, but I wouldn't recommend Hail Marying this until the very last minute, right? Where it's like you have nothing to lose. It's essentially what we're doing. That's what a Hail Mary is, right? But again, if you're in this situation and you want to start, say we're all the way here, we have 3-4 days left, and you want to try to Hail Mary it, you've been taking a bunch of break evens in between, I say go for it. But again, make sure you do your math. It's simple math anyways, right? And make sure you don't go underneath that 0% mark. You don't go below 100,000 on, a 100K account, or 50K on a 50K account, or 10K on a 10K account, right? Because then you're going to lose your challenge fee and you're back to square one and you're out like $600 in the case of a 100K account, right? So you have to be careful of that. Now, that being said, you could of course Hail Mary it, and maybe you'll hit, that 5%. Actually would have hit it already in this particular scenario, but you guys get the idea. Imagine I move all of this for a second, right? And this is all underneath that 5% mark, kind of something like this. Maybe you got really close to it at like 4 point something percent, right? And then now we have, a few days left, and maybe you took another loss here, and oh man, you're only like 2% away, right? Or 2.5% away from it, right? Well, again, if you're in a scenario where it's the last day, risk 2%, right? Or take a bunch of 1% trades, right? Do what you have to do to try to hit, over that 5% mark, and ideally you will pass it, right? Now I'm going to give you guys one more scenario here. I didn't actually draw a graph for this, but there is of course the situation where you are in deep drawdown and you want to try to recover it back to the break-even point. So let's just for a second, I'm going to move this down just to make this a little bit make a little bit more sense. Oops. 1 second. Okay, so I modified this graph a little bit because of course you could go as far as negative 10%. At this point though, right, we're looking at actually blowing the account, right? So this is a line that you do not want to cross because again, what's going to happen? Well, if you hit negative 10% or over 5% on a single day, what's going to happen? You're going to lose your challenge fee. It's not going to be very nice. You're back to square one. And again, you're out $600 US. It's not a nice feeling, right? Now, that being said, it can happen and you don't want to, it's weird. It's kind of a catch-22. You don't want to try to avoid it so much that it tilts you and messes up your trading psychology. But at the same time, do everything you can to avoid hitting that 10% mark, right? While you're actually in the challenge, right? So say we have a really bad, start to this, right? Or you know what? I'm going to give you guys a situation that I've been in too, where it's like I've been up quite a bit and then I just hit a string of losses back to back, right? And that can happen too, right? Maybe we're just losing over and over. We're over trading. We're getting tilted. It's fine. We're building experience, trading experience by doing this. So not a big deal, right? And, again, we have to accept that at the end of the day, our $600 challenge fee is part of the risk. And there's a chance that we can lose it, right? We know that. We have to accept that, right? You can't be fearful that you're going to lose that challenge fee, right? Or that you're going to hit 10%, or it will mess you up psychologically. 100% it will. I know because I've done it. I've failed challenges before too. Of course, I've failed a bunch of them. But my point is, say that we are now, 18 days into this. We keep losing. Maybe we hit a break even. We hit some small wins here. And we're just trying to slowly recover it. If you're in this situation where you're now down some 6% in a verification or a challenge, it's applicable to both. My suggestion here is the same thing, right? Start upping your risk within what's reasonable. And again, you have nothing to lose at this point. You have 4% to work with roughly, or whatever this is. Okay, say we're at negative 5%. You have 5% to work with. You can take 2.5% trades, which I wouldn't really suggest doing. Maybe do 2%, right? Risk per trade. And all you want to try to do is hit this, right? And whatever, if you hit a really good trade, of course, you could try to target our soft 5% here for an extension, not on the verification, of course. I'm talking about the challenge, right? But really, focus on one goal at a time. If I were in this situation where I'm down, say 5%, I really don't want to lose my challenge fee, obviously. But, not a big deal if I do lose it anyways. My goal here is just to make, 2 to 4R, right? Depending on what you want to risk. You could stick to 1%, but again, I would probably up it if I have 2 days left. And I hit 2R and I get just above break even, I get a retrial, right? Assuming that it's an FTMO challenge. Or even a verification, same thing, except I'm starting back at the challenge, right? But that's better than losing out on my $600 US challenge fee on a 100K account, right? I think you guys understand that. Again, it's not cheap at the end of the day to do these challenges. I still think, doing prop firm funding is a fantastic opportunity. Don't get me wrong, but these are some of the challenges that you're going to face, right? And by going through this, again, you're going to build up your trading skills, right? Your trade psychology skills, and it's okay if it takes you, 3, 4, 5 not verifications, but retrials and losses before you finally hit one, right? But again, at the end of the day, I see a lot of people come into this. They're totally, they're not prepared, number one, or maybe they haven't practiced enough. And of course, you have a high chance of losing it, right? Or failing the challenge, right? So in order to avoid that, I highly suggest practicing, doing back testing and trading in a live market environment with a demo or small live account where you have some exposure to risk that makes you sweat a little bit in the market, right? If that means you're taking a $1,000 account and risking, $10 per trade, if that is what makes you a little bit uneasy, then you're right where you should be, right? You don't want to make it so much that it's like, you don't want to take $10,000 of your savings and start risking, $100 a trade, right? Maybe that makes you really uncomfortable, right? It depends on the person at the end of the day. and what they have saved. But you don't want to be in a situation where that, tilts you a lot. And, you don't want to have it where it's like $100 account, you're risking $1 and you don't feel anything about it either, right? You need to find that happy medium that, it just pushes you a little bit outside of your comfort zone so you can start building up a thick skin to things like losses, and it'll teach you how to build consistency in your trading. Actually, guys, so one thing I want to talk about too really quick before we wrap the video up is what happens when you actually get your funding, right? Now, I don't want you guys to think too far ahead in the future. Take it one step at a time. But obviously, if you're able to get funded, there are certain things that you want to probably do in your approach to trading it. Now, in my particular case, when I first got funded, the honest truth is I went into drawdown right away because I started violating my trading plan. And this is something that I've seen, a lot of people do. I'm not saying that everyone does it, right? Again, I think it boils down to trade psychology skills and whether or not, you're able to, handle that. Maybe you're not ready for it, but I was able to recover it and make a profit, and now I trade pretty consistently with it. Again, I'm not always targeting 10% a month unless I'm in a challenge like I was this month, right? But if I'm using a trade copier, and in some cases you may not even want to use a trade copier because maybe it'll tilt you, right? I know one of our team members, Dan, whenever he does a trading challenge, doesn't matter what prop firm it's with, he actually turns off his trade copiers and just focuses on that one account, right? Because he doesn't want it to affect his equity curve on his live and his funded accounts and potentially go into, drawdown and lose them, right? That's kind of the risk that you have with this, right? So really, and I should probably modify this and make this, down to negative 10%. But with an FTMO funded account, again, you want to approach it the same way, except, there is no time limit. Obviously, you have trading periods that last on average 30 days before they give you the payout. But essentially, say you have your first funded account, and same thing, maybe you start with a small win here, right? That's fine. It's just a small win, not a big deal. What you could do is, and what I would suggest doing, is just waiting until that pay period is over and get your refund on the challenge, right? Rather than going through, what I did and going into drawdown and then, potentially for months, it could be months or weeks or days where you're kind of sitting in here and you're not getting the payout and you have your challenge fee kind of on the line still, right? It's kind of held hostage, right? So your first goal really should just be to get into some profit. Don't try to, aim for 10%, obviously. And, I say obviously, but I think a lot of people try to do that. That's what I tried to do when I first got funded. It just, you're adding psychological pressure to yourself that really isn't necessary, right? So ideally what you should do is just get a little bit above, maybe target 5% or less. You don't have to make a lot, right? If it's a 100K account, you're looking at like, $1,000 per percent. So even if you make 2%, I mean, say you're working a job and maybe you make $3,500, $4,000 a month through that job, and then you're making an additional 2% or $2,000. That's a nice bonus, right? So if that's the case, you wait it out, right? Wait until we hit that 30-day mark, your payout. Go through the whole invoicing process with the prop firm that you're trading with, and you'll get your challenge fee refunded back, to your credit card if you use your credit card, or whatever you paid with, right? You get your challenge fee back of $600. So you're making $2,000 net, right? So that's how I would approach, my first month. Don't do what I did when I first got funded and go deep into drawdown. It took me a long time to recover it, right? It wasn't nice, but that's one scenario that can kind of happen. Maybe you start with a few losses like you did before. Again, you don't want to get tilted with it. And say, for your next month, right? Your next pay period. Okay, we go back into positive. Okay, we kind of hover around. That's fine. And then, maybe this month we only want to try to target 5%. And that's fine, right? We don't need to set these lofty goals of 10, 20%, right? This is not a race. It's a marathon, right? It's a marathon, not a race. Sorry. So if we're at, say, 4,600, just wait, right? Or maybe it took you a whole month to get to that, right? Maybe you took another loss here, and maybe we made just under 5%. Okay, not a big deal, right? We don't need to try to hit 10%. And the reason we don't have to try to hit 10% every month is because, honestly, 5% is enough. Of course, earlier on, when we're undercapitalized, maybe we only have a 100K account, maybe we want to try to hit 10%. And I'm not saying that you shouldn't, try to hit higher numbers. There are going to be certain market conditions and situations where you have a really great month. Maybe you hit 20%, right? It's totally possible. I've done it before. People on the team have done it before, right? But hitting 5% is a nice target. It's not too difficult to hit. And when you are properly capitalized and you have, say, 200K in funding or 400K or more, right? If we do 5% and we do 5% on 200K in funding, that's 10K. That's pretty good. If we do that on 400K, it's doubled, right? It's 20K in profit, right? So that's the reason you don't have to try to hit 10% every month, right? If you set these unrealistic goals, you're really just going to make it more difficult for yourself. So something to keep in mind. And the last thing that I want to discuss here is actually having some sort of a buffer left in your account. So this is an idea that I got both from Blackwatch and from Dan, who is, again, another team member on the Phantom team. And essentially having this buffer here is to help both with your trade psychology and to ensure that you have some sort of buffer, as the name states, right? To account for if we hit a small losing streak, right? So if we pretend that this is our buffer here of like 2.5 all the way to potentially 5%, right? You're essentially just leaving it in. You're not withdrawing it from the account, and that way we can absorb a couple losses if we need to, right? And then eventually we can take this back into profit. And the only thing that we're going to withdraw from the account is going to be anything above 2.5, maybe 2%, up to 5%, right? So anything above this is pure profit for us, and everything else we're going to just leave in, right? And again, reason for that is so that we can survive small drawdowns, and we don't have the psychological pressure of being in drawdown on the funded account and trying to recover it, because that's not fun to do either, right? If you get into drawdown in a funded account, of course your goal should be to get it to break even first, right? So anyways, once you're able to build up a good track record and you're making over a certain amount of money per year, of course this really depends on where you are, where you're located and what your tax jurisdiction is. But in my case, if you're making over 60K where I live, it makes sense to open up a corporation and use that in order to be more tax efficient. So something to consider as well, right? So that's pretty much it for this video. I hope that you guys learned something from it. But this is the approach that I've personally taken. I really highly recommend risking 1% per trade, because that's going to give you enough exposure to actually take you to 10% in a reasonable time within that 30-day period. I mean, that's a feat in and of itself. I don't always have 10% months, right? I've talked about this in the previous video where, I can make 5%, and it's, with enough funded accounts, you really see how much the money stacks, right? And your profits stack. So, to make 10% in a month is really impressive. If you're able to do it, you're among, the top 5% of traders, in my opinion, if you can do that, right? And it is possible, but there's so much preparation and skill that you need to build up in order to do this that, of course, most people fail it, right? But it is possible. So just a matter of practicing and building up the skills. But anyways, again, hope you guys learned something from this video. I don't really have much else to talk about here. I pretty much covered everything. So I will catch you guys on the next one.